I want to buy a house. I qualify for a fixed 30-year mortgage. I spend many hours looking on Zillow. I'm ready to go check one out today. Do you want to come along? Hello? Hey man, I'm out looking at houses today. I think I found the one. Hello?
Am I talking to Spencer Cornelia?
Yeah.
Have you ever wondered how you can pay off your mortgage in 5 years? Save all of that interest, bro. Just think of all the interest that the banks are collecting from you over the life of the loan. Don't you want to save 70% of your total interest payment? All you have to do is sign up for a free consultation from me, and I'll explain to you how you can pay off your entire mortgage in just 5 years. You're all into the real estate game, and it takes you 30 years to pay off your mortgages. All of my clients do it in 5. How about that? There's no catch. It's called velocity banking. Let me send you this video to watch right now.
Who wants to create a house of cards? Velocity banking has been popping up in real estate investing circles for a few years now, and I'm making this video so that you can be aware when you get confronted with someone who implements this magical strategy, as I want you to feel at ease and not be swept off your feet. Step 1. Accept that there are a lot of assumptions. Assume that all personal finance numbers are going to be the same. Nothing will go wrong in the 5 to 7 years it takes to fully implement this strategy. You will not lose your main source of income. Your income needs to be a certain amount. I've seen a few videos recommend that $60K is the minimum salary needed. Step 2. Be comfortable with taking an insane amount of risk. Step 3. Access multiple lines of credit, typically a HELOC or credit card. Step 4. Obsess over how much interest you pay on a mortgage. In order to implement the strategy, you need to really care about the total interest number, even though it should mean very little to you. Step 5. Hold on for dear life. For all of you yet to be pitched this magical solution, I'm going to provide a quick breakdown of how this game works. I'm going to use very simple numbers for you: a mortgage balance of $100,000, a HELOC with $10,000 of available credit, and a credit card with $5,000 of available credit, and an income of $5,000 a month after taxes. In month 1, you will use your HELOC to pay down $10,000 off the mortgage balance. That leaves you with $0 of HELOC credit available. Additionally, your family has $3,000 a month in various expenses, so there will be only $2,000 available on the credit card. The $5,000 income hits your bank account. You replenish $3,000 of your credit card balance and $2,000 of your HELOC. Month 2, the income hits your account. You send $1,000 to pay the monthly mortgage payment. You'll send $3,000 to pay off your monthly credit card expenses, and the remaining $1,000 will go towards your HELOC balance. This strategy goes on until the HELOC is back to full credit availability of $10,000. Here's where the magic happens. You use the $10,000 to drop the mortgage balance by another $10,000. From the previous 10 months of paying $1,000 towards your monthly mortgage, the balance will sit at $80,000. With the HELOC fully replenished, you'll send the $10,000 to the mortgage balance, dropping it to only $70,000 remaining. This is what that community calls chunking. You will repeat the monthly process until the HELOC is replenished again, and then you will chunk again, and the mortgage balance will drop to $50,000. Notice how quickly the mortgage is getting paid? That's the pitch of velocity bankers, and that's why this process seems so magical. I hope you were paying attention during the last segment where I told you that a lot of assumptions would need to be made in order for this magic to work, and I really hope you, the viewer, can see the amount of risk that underlies this strategy. Why I would never advise using this strategy. 1. You're leveraging yourself in such a way that you could lose your house if anything unexpected goes wrong. This is life we're living. Unfortunately, unexpected emergencies happen all the time, and if the timing is just right, you could be fully leveraged and have huge monthly payments that you can't cover. 2. You're risking years of financial stress and potentially losing everything, all to pay down a historically low mortgage interest rate. 3. What happens if you were to lose your job when you have a credit card with a high balance, your HELOC is fully maxed, and you have zero income coming in? You legit can't pay a single bill. 4. There is no secret to paying down a $150,000 mortgage. In order to pay it down, you're going to have to leave with $150,000 out of your wallet. In that same time frame, do you think there are better ways to invest your money? 5. Best case scenario, in 5 to 7 years, you will have paid off a historically low interest rate. Sure, you won't have a mortgage, but you'll also have $0 to invest. 6. We've just experienced a 10-year bull market. Let me remind you that during the last recession, HELOCs got called due, and the housing market took a little tumble. What does that mean? If you have an outstanding balance on your HELOC, the bank could call those funds due today, and you better have the money in cash. What I would recommend: 1. Buy a house hack, live for free. 2. If you're obsessed with living a life mortgage-free, pay down the principal on your mortgage with your net income every month. This strategy works as well with way lower risk. 3. Spend all of your free time networking with investors and educating yourself with the concepts of real estate investing. Turn all of that net income into income-producing properties or an income-producing hobby. In conclusion, is velocity banking a scam? No, but it's really misleading. Like most secrets online in the social media driven society we live in, it leads to an empty feeling because no magic is provided. Hey everyone, thanks for watching, and make sure to hit subscribe so you can follow along on my journey from zero to financial independence.